Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a company takes on a huge pile of debt? Well, today we're diving into a report that might just give us a clue. It's like watching a tightrope walker high above the ground. You're holding your breath, waiting to see if they make it. This time we are cracking open an 8K filing from Agree Realty Corporation, or ADC. It's a quick snapshot of a big financial move they just made. Instead of just listing numbers, we'll try to understand what these numbers mean for the company's future. Before we jump in, if you find this kind of straightforward analysis helpful, please subscribe to the channel. Also, join our Discord community. The link is in the description below, where we chat about all things finance and business. So what's an 8K filing anyway? It's basically a corporate breaking news report. Companies use it to tell investors about major events that could affect the stock price or the company's health. This particular 8K is about a big debt offering. Scrollers of report, date of cumulative event reported, May 14, 2025. So the event happened on or around that date. Keep in mind that financial news moves fast, so while this is recent, always check for even newer updates. Scroll Agree, Cat Realty, Corp and Escrow. Agree Realty Corporation is the company we are looking at. They are based out of Royal Oak, Michigan. Alright, let's get to the juicy part. What exactly happened on May 14, 2025? The main event is that Agree Limited Partnership, which is a subsidiary or a smaller company controlled by Agree Realty Corporation, issued $400 million in notes, basically a fancy word for bonds or debt, due in 2035. Think of it like this. Agree Realty needed cash, so they borrowed $400 million from investors, promising to pay it back with interest by 25. That interest rate is set at 5.6%. The interest rate of 5.6% is what Agree Realty will pay to those investors each year for the use of their money. So for every $100 invested, they'll pay 56 TAR per year until 2035. The report mentions guarantors, including Agree Realty Corporation itself. This means that if the subsidiary can't pay back the debt, Agree Realty Corporation is on hook. It's like having a co-signer on a loan. The filing includes the underwriting agreement as Exhibit 1.1. Underwriting agreement is the contract that details all the terms of this debt deal. It involves JP Morgan Securities LLC, Mizuho Securities USA LLC, PNC Capital Markets LLC, and Wells Fargo Securities LLC. These are the big banks that helped Agree Realty sell the debt to investors. The report is officially signed off by Peter Koffner, who is the Chief Financial Officer and Secretary of Agree Realty Corporation, so it's legit. Now let's step back and see the big picture. Agree Realty has taken on a substantial amount of debt. The good news is they have a long time, until 2035, to pay it back. The 500-600% interest rate isn't too bad, but it's still a significant expense. The big question is, why did they need $400 million? Were they buying new properties, expanding their business, or maybe just refinancing existing debt? The 8K doesn't tell us the whole story, but we can guess. Typically, real estate companies use debt to acquire more properties and grow their portfolios. If Agree Realty is using this debt wisely to invest in properties that generate good income, then it could be a smart move. However, if they're taking on too much debt or investing in risky projects, it could spell trouble down the road. What are the risks? Well, interest rates could rise, making it more expensive to refinance the debt in the future. The real estate market could cool down, reducing the value of their properties. Or Agree Realty could simply run into financial difficulties and struggle to make their debt payments. Looking at Agree Realty, they are playing the long game. By securing this debt, they are betting on continued growth and stability in the real estate market. However, debt always comes with risks. It's a balancing act, and the company needs to be disciplined in how they manage their finances and choose their investments. Alright, that's our quick look at this 8K filing. What do you think of Agree Realty's big debt move? Do you think it's a smart strategy or a risky gamble? Share your thoughts in the comments below. If you found this helpful, please hit that like button and subscribe for more corporate decoder breakdowns. And don't forget to join our Discord community to keep the conversation going. The link is in the description. Thanks for watching, and I'll see you in the next one.